Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sector trends, and most importantly, we will be addressing your queries during the course of the show. So guys, keep commenting on our live feed and we'll have it addressed by our technical expert on the show. But before we bring him on board, let's see what the global handover looks like. Wall Street has snapped two-day losing streak. The tech-heavy Nasdaq has surged over 2%, while the Dow and S&P have risen nearly 1.5%. Investors will keenly watch out for US jobs data for the month of May. European indices, meanwhile, closed marginally in the green as investors continue to digest the inflation numbers, which came in at record highs of 8.1%. OPEC and its oil-producing allies have agreed to hike output by 6.48 lakh barrel per day in July and August as the global energy market continues to see the impact of Russia-Ukraine war. Stocks in Asia, meanwhile, trading mixed with Japan's Nikkei outperforming peers. Some selling pressure seen in Hang Seng. And for our own markets, SGX Nifty indicates a gap up open. In our stock spotlight today, we focus on Reliance Industries, UltraTech Cement and Hindalco. Also on the show today, after a muted March quarter, is there more pain ahead for the cement industry? That's what we will be discussing. But first up, let's get to the technicals with Chandan Taparia of Motilal Oswal. Chandan, thank you for touching base with us today. Gap up open. Should we start rejoicing?
Good morning. We have seen that the base of the market is shifting higher. And the interesting part is that from last 2 days, the Nifty is holding a key support of 16,442 marks. When yesterday it headed towards 16,666. It was forming lower highs in last 3 trading session. And today in the opening, we are negating the same. So that will start the next leg of rally. So overall, we believe that 16,442 could act as a major support. And this rally can extend to us 17,000 plus marks in just a couple of more days. So I think one need to continue to be with positive bias. After the positive opening, if you witness any kind of a small dip, that can be utilized for the buying opportunity to continue the ride to our 17,000 marks. At the same time, we also seen the good strength in DJIA and other global indices are doing well. So we believe that again, momentum and recovery will be there from across the board, and selective cement, IT and metal are also likely to witness short covering rally in the market for the day as well.
Well, that would be, I'm sure, heartening to know for many people who've been waiting on the edge about what's going to happen. But looks like the positive momentum is something that looks like the flavor for today and maybe for the next few days as well. But let's talk about the big winner from yesterday's session, Reliance Industries, a solid 3.5% rally, which we saw on the counter yesterday. How are the technicals panning out? The stock is very close now to its 52-week high as well. So do we see it cross that level meaningfully and probably make fresh highs in the near future?
Exactly. We are quite bullish on the Reliance industry. In fact, today I have selected that as a buying trading ideas. We have seen that this stock is continuously doing well, and it has been moving upwards from last 7 consecutive years. Year-to-day basis, this stock is up by 17%. And yesterday it formed a strong bullish candle with multiple support at 2630 kind of level. It managed to surpass the previous hurdle of 2675 and making higher tops, higher bottom on the weekly scale as well. So by looking at the entire data set, we are expecting Reliance to hit the new lifetime high towards 2850. So one can buy with support of 2670, expecting this rally to extend to us 2800 to 2850 levels in days to come.
Okay, all right. Let's also start addressing some queries. But before we do that, you were talking about how you're optimistic on IT and cement. Cement we'll come to later, but talk to us about IT and any particular names that stand out for you.
Yeah, actually the Nifty IT was making lower top, lower bottom in last 8 weeks. And this is the only week where Nifty IT is posting on the positive basis by around 4%. So we have seen huge shorts being built in the last 6-7 weeks, or in fact in the last series. Heavy shorts were seen in many IT counter. And now most of these stocks are bottoming out, led by buying interest and the recovery in the Nasdaq as well. So earlier we were falling due to the weakness in the global markets, especially the Nasdaq. And now as the Nasdaq is recovering, we are also expecting the recovery in the Indian IT companies as well. So Nifty IT is likely to see the movement of 3 to 4% led by short covering. So because of that, most of the IT counter could be in focus. We can talk about the name of HCL Tech, which is negating its lower top, lower bottom. Yesterday, it recovered well with support of 1,010 marks. So with that support, one can see a bounce towards 1,080 to 1,100 kind of level. Apart from that, TCS is one of the strongest counter in the IT name. So if you notice here, at the time of market decline, this stock has not much fallen comparative to the entire decline into the IT name. So I think this stock has potential to outperform. One can buy with support of 3350, and here we are expecting a move towards 3550 to 3600 level. So TCS is likely to be outperforming, led by some bottom out approach in IT name. But if you're talking about non-FNO counter, I'll focus on the Tata Elxsi. MSI rebalancing is also there. So here we are expecting the rally towards 9,000. So TCS and Tata Elxsi could be the top pick in the IT with some recovery in the entire index as well.
Okay, so two names from the Tata pack and IT pack, of course, which could do well according to Chandan. Let's talk cements as well. Lots of questions coming in. But before we do that, I want to just flag off one stock that could be the cynosure of all eyes, and that's UltraTech Cement. They've announced a capex of 12,885 crores to increase their capacity by 22.6 MTPA. In fact, this commercial project, or rather commercial production from these new capacities, is expected to start from FY25 onwards in a phased manner. So this big corporate announcement from UltraTech definitely is something that could keep this stock hot in trade today. Apart from that, of course, we're getting a lot of queries on cement. But first, let's talk about UltraTech specifically. Chandan, what is your reading of the chart?
Yeah, so if you look at the price factor, this stock is all set to form the double bottom. Just 12 weeks back, it made the low near to 5630 marks. In the last week also, it made bottom near to 5700 zone. So somehow forming the double bottom, and now some bullish divergence are visible on the mechanical indicator. Technically speaking, on the lower time frame, the stock is all set to form an inverse island reversal, that is the bullish formations. So by looking at the entire price structure and the scenario, expecting some smart uptick in the counter, so it can head towards 6250 kind of level. One can look at buying with support of 5850 kind of level.
Okay, let me read out two queries which are cement related. Rajkumar wants your view on Ramco Cement, and TSS. We don't have the full name of this person, but the handle is TSS. He wants your recommendation on Ambuja Cement. Any of these names that you like?
Yeah, so first talking about the Ramco Cement, the stock was under pressure. We have seen good recovery from the lower levels. It recovered from 633 to 708 kind of level, finding some hurdle at 800 marks. But now if it decisively manages to hold above 700, then some bounce could be seen to us 730 kind of level. So 730 kind of level could be there in Ramco Cement. And if you talk about the Ambuja Cement, this is one of the strongest counter. On weekly chart, it is forming a breakout from its pole and flake pattern, has been consolidating at higher zone, resilience at the time of market fall. So here we are witnessing more strength and expecting rally to unfold towards 389 to 400 kind of zone.
Okay, all right. Let's talk about Apollo Hospitals then. Gopika has written to us and wants your view on Apollo Hospitals and how it's likely to pan out today. But Chandan, not just today, but talk to us about the next few weeks, how they're likely to pan out, because the last 1 month has been fairly difficult, fairly volatile for this counter. From I think 4,300 rupees odd levels, it's come down by about 750 per share. How do you see it playing out?
So we are not much comfortable in Apollo Hospital. In fact, huge shorts were seen in the stock. Even the short rollover has been noticed, which clearly indicates that weakness could continue into the current series as well. Earlier, it witnessed some recovery, but the recovery was sold smartly. So I think further weakness could continue, and the stock has potential to drip down towards its next major support of 3360 marks.
Okay. I want to shift gears and talk about an auto company. Sanjay Tiwari is sending us a question on Eicher Motors. Just like many of its automobile peers, Eicher has also seen a decent amount of recovery of sorts in the last 1 month, in the last 2-3 weeks actually, in line with many of the other automotive companies as well. So how is Eicher looking to you, and is it something you like, or are there any alternatives within the auto basket you'd like to flag off?
Exactly, I want to talk about other alternatives. First, if I talk about the Eicher Motor, it has been recovering from the lows, but we have multiple hurdle near to 2800, 2850 marks. So multiple times trying to attempt to the same, but failing to hold beyond the same. So if manages to hold 2800, then only we can see an extended rally towards 3100 marks. But as an alternative, we have positive view on the auto name. And Ashok Leyland is the one name where we are witnessing a consolidation breakout. This is a typical pole and flake pattern surpassing its multiple hurdle of 140 to 143 marks. Given a highest recent daily close, weekly chart is also positive, led by some cup and handle formations and surpassing its falling supply trend line. Longs built up is also visible in the stock. It's trading at its 52-week high and 2-year high is 153 kind of level. So here we are expecting a rally towards 153. So I think iShares can remain some consolidative nature, but Ashok Leyland is the other name where you are witnessing or likely to see the movement of around 4 to 5% on immediate basis.
Okay. Another stock, Chandan, which could be a big talking point and very much in focus, perhaps could see some reactions as well, is Deepak Nitrite. There was a fire at Deepak Nitrite's GIDC plant yesterday in the evening, and that's something that a lot of people on social media and on different groups have been talking about. Talk to us about the technicals. Could it see some reaction today or in the days to come?
Yeah, yesterday we were getting so many forwards about the plant fire and all. If you look at the price behavior, it got stuck in a range. Because I've noticed in last around 32 weeks, the stock is forming the lower base. But at the same time, multiple supports are also visible near to 1800 marks. So I think because of any reason, if the stock corrects, one can utilize the support near to 1800 to go for buy on decline strategy to again drive the move towards 2200 levels.
Okay. Next up is a query from Rohit. He wants to ask your opinion about Biocon. Biocon, I think, shut shop at around 320, 322 levels yesterday. It was, largely in the weak territory for the last 3 months. It's been range bound in a way. Hasn't really done much for its investors. But in the next 1 or 2 months, perhaps, do you see that reverse?
Actually, not much comfortable in Biocon. The reason is that resistance are gradually shifting lower. And now it's near to a major support zone. If I notice the price behavior in the monthly basis from last 2 years, the stock has been holding near to 315, 320 zone. And now it's close to that level. If the stock fails to hold this 315 marks, then it's opening further 10 to 15% on the downside. So it's the stock is at major critical zone. Either let it surpass beyond 333 for any kind of position with support of 315, or otherwise if it breaks 315, it opens the downside tick towards 285. So it's near to a make or break zone. So those who are holding the position, they need to follow the key support of 315 marks in the Biocon.
Okay. Would you like to also flag off your favorites in the market right now before we let you go? What are the stocks that you like and want our viewers to also perhaps take a look?
Yeah. So, Karunya, we are continuously talking about the positive view on the market. In fact, in this decline, we were expecting Nifty to form the bottom near to 15,735, and exactly it did the same. And from those levels, we are still having the conviction for 17,000 to 17,250. Already the index is rallied by around 800 points. We are still expecting total 5 to 600 points uptick in the index. So 17,000 to 17,250 we are targeting in the Nifty. Similarly, in the Bank Nifty, we are expecting this rally to extend to our 36,666 marks. Now, talking about the stock wise, positive on the Reliance industry. Already you talked about the name. We have positive view. Stock is holding well and supports are gradually rising. So recommending to buy with support of 2650, expecting it to move to us 2820 to 2850 level. Second trading ideas that will be buy on Ashok Leyland. Already you have talked about the same. This stock and sector is in focus, given a consolidation breakout, forming a breakout of its pole and flake pattern. So recommending to buy with a stop loss of 140 for upside move towards 150. So Reliance and Ashok Leyland could be the two names from the R side. Apart from that, one can also look at counter like cement and selective beaten down IT name from some recovery as well.
Chandan, couple of more queries coming in. I just want to address 1 or 2 questions more before we let you go. Srinivas has written to us on Twitter and he wants your opinion on Apollo Hospitals, which we've already addressed. And next is HDFC AMC. So if you could just talk to us about the technicals of HDFC AMC, because like many of the group stocks of HDFC, this one also has been a tad weak of late.
Yeah. So Apollo, as mentioned, I'll avoid. Talking about SDFC Group, I believe that bottom is being formed in SDFC Limited, SDFC Bank. SDFC AMC per se, the stock was continuously making lower top, lower bottom. However, some recovery seen, but this is not our preferred pick. It has multiple hurdle near to 1980, 2000 marks. So you can play the bounce, but till 1980 marks. But we like SDFC Life. This stock is now turning out as a strong the mover. We have seen the good run up in the last week. Even in this week also, it is holding well to multiple support zone. So 590 is the major support in SDFC Life to extend this move to a 630, 650 zone. So SDFC AMC can see some bounce, but we have more preference now as a momentum stock in SDFC Life.
Okay. One quick question as well on ONGC. Actually, we've been getting a lot of posts on ONGC today on the feed. This one is from Debabrata Mohanta. What is your reading of ONGC's charts?
Yeah, Lata, this question from the person, and ONGC is bottoming out. However, if you name the other PSU names, we have more positive on metal-related companies like Coal and India and all. But if you talk about ONGC and the refinery name, then ONGC was underperforming, but the good part is it has not corrected much from the higher levels. It has multiple support near to 141, 145 zone. So some positive to range-bound bias could be seen. Expecting some bounce, but might expect some hurdle near to 160, 162 kind of level. So some trading bed could be seen, or bounce could be utilized to again exit the positions.
Okay, the last stock on our watch list today is Hindalco. They've completed the divestment of one of their wholly owned subsidiaries. It's not a very path-breaking sort of a news, but yes, something that could keep the stock, make the stock a talking point today. How are you reading into Hindalco's technicals?
Actually, we have seen some recovery in the market, but these metal stocks are not doing well. However, huge shorts were being built, coal writing are visible, and because of that, these stocks are not allowed to move on higher side. So as of now, if the price pattern is concerned, this stock has been consolidating in a range where resistance are gradually shifting lower. So as of now, it's in no trading band. If it moves above 430 zone, then only we may get some sign for bottom out approach. Otherwise, it can again trip down towards 385. So I'll closely watching it around 430 marks to initiate any kind of long position in Hindalco. But if you ask from the metal and mining name, then Coal India is a one name where we are expecting a move towards 210. So Hindalco, conditional trade, Coal India on positive bias.
Okay then. Chandan, thanks a lot for joining in. It's always a pleasure to get you on board and hear your insights and assessment of the markets and different technicals of stocks. Okay, moving right on, my colleague Sachin Pal is with us to talk about cement space. Sachin, thank you so much for joining in. If you look at the cement firm's performance for the quarter gone by, they've reported single-digit sales growth, and this has happened for a second consecutive quarter. Probably there has been some gradual demand recovery. There was some price hikes as well, which were undertaken by many of these companies. But talk to us about how things could play out in the weeks and quarters perhaps to come in terms of demand, in terms of performance.
Yeah, hi Karunya. Good morning. Thanks for having me. So regarding the cement sector, like the last quarter, actually we witnessed some kind of slowdown, but those were primarily on the back of some weakness due to seasonal factors. There were unseasonal rains in some pockets, some lag in terms of project execution. That really had impacted the demand during the last quarter. But this quarter, again, we have seen that trend has actually continued, and most of the cement companies in the sector have actually reported very mild positive growth, if in the range of say 0 to 3%, 0 to 4%. UltraTech had a flattish volume growth, and most of the revenue growth is actually coming from higher realizations. So, in fact, the execution in the projects have actually considerably slowed down in the last 6 months, and the trend is actually expected to continue going forward as well. Even on the margins front, most of the companies on a sequential basis had a flattish impact on the cost structure. So that really had an impact on the sequential margins. However, going forward, as the coal prices have actually increased by almost 30% on a quarter-on-quarter basis, so the cost structure is also anticipated to go further up from current levels. So that really is expected to be another pain point for the cement sector going forward.
But given this inflation that you're talking about in coal prices and crude oil, etc., will there be more price hikes now in times to come, and could that in return dent demand?
So yeah, so the only thing that has played out in the sector is that the price hikes have actually lagged the cost increases that the cement sector has witnessed in the past 6 to 8 months. So the proportionate increase in the price hikes has been fairly slow in comparison to the cost increases. So that has really had a negative impact on the margins. And going forward as well, the price hikes to the tune of 5-7% are anticipated, but since that the demand has already taken a backseat, so the amount of price hike that the cement manufacturer will be able to push remains to be seen, and that remains a cause of concern both on the margins front as well as the demand front. Especially the demand is actually driven mainly by the infrastructure and housing segments, and that's primarily driven by government projects. Given that oil is at elevated levels of $110, so the government does not really have the bandwidth to push the high-scale infrastructure projects. So from the demand perspective as well as the margins perspective, we expect more pain ahead for the cement sector in the coming 6 to 9 months.
So what should you do with your cement sector holdings? I mean, if you've made enough profit, perhaps, would you say that people should wait for more correction of sorts and then add, or should they stay away for those who have not bought into cement companies yet? What will be your advice?
So right now, like, we are actually starting we are in the initial phase, probably in the initial phase of the down cycle. So it kind of moves on for 2-3 quarters more. So if somebody who's looking to add exposure to the cement should ideally wait and add it in a gradual manner. Most of the stocks have come off like 30-40% from the all-time highs. So the valuations have corrected, but on an absolute basis, they are still trading at elevated valuations. So the next 6 months, probably add in gradual phases. That would be the advice. Probably stick to, since there are multiple factors at play coming into the sector right now. Even Adani's entry into the sector could actually shake things up for the entire sector as well. So if they kind of go aggressive in their expansion plan, that most of the companies could see some kind of profitability shake out in the next coming years.
Quick question, how do you think the market will digest UltraTech's news, the near 13,000 crore capex plans that they've announced, and will others also follow suit?
So there have always been like large-scale capex announced. So Dalmia is also undergoing capex in the eastern pockets. Probably UltraTech is also announced a 22 million metric ton capacity expansion, but that will come out towards the end of FY25 and in a phased manner as well. So a lot of capacities are actually expanding in the eastern region and the different regions. So from a long-term perspective, it's positive, but considering the current dynamics of the sector, I think we should see some more weakness in the counters in the coming months.
Okay, Sachin, great chatting with you, and thank you for sharing your insights and your views on the cement sector and how things are likely to play out. That's all we have in this edition of Morning Trade. Thank you for tuning in, but stay tuned. Markets with Santo and CJ is up next.